Korea's central bank will convene its final monetary policy meeting of the year on Thursday, which is expected to coincide with the Federal Reserve's announcement of a likely U.S. rate hike. Despite the widespread expectations the Fed will make its move, local observers say the Bank of Korea will keep its rate steady. Kwon Jang-ho has more.
The Bank of Korea is widely expected to keep its base rate as is when it meets for the 12th and last monetary policy meeting of the year on Thursday. The central bank has been holding the rate at a record low of 1.25% since its surprise rate cut in June.
The BOK will likely hold the rate steady as the current economic circumstances require that it take a wait-and-see approach, especially with the Fed likely to raise its rates this week.
The Fed is widely expected to raise its interest rates by a quarter point from 0.5 to 0.75% at its meeting Wednesday. It would be the first rate hike in a year and only the second since the global financial crisis 10 years ago. The rate hike is sure to have a direct effect on other economies around the world, starting with a potential capital outflow from emerging economies, including Korea. That could have a particularly strong impact on Korea, which is contending with a slow growth trend and other issues. The country's growing household debt, which surpassed $1.08 trillion at the end of June, is perhaps the biggest factor for the central bank as it weighs whether to raise or lower its key rate. The Korean economy is also struggling under the weight of a massive corporate restructuring drive and the ongoing political scandal. The OECD has kept its outlook for Korea unchanged at 2.7% for this year, but revised down its growth forecast for 2017 to 2.6% from an earlier projection of 3%. Kwon Jang-ho, Arirang News.